So yesterday, MarketSmith updated their market condition status to a confirmed uptrend. Earlier, it was rally attempt. So a lot of students called me, messaged me, saying, "Rohit, why did this happen? How come suddenly the market status has gone from rally attempt to a confirmed uptrend?" So that is what I want to discuss in today's video. So this is like a MarketSmith India tutorial. This is the best way to understand this powerful website, this powerful platform for screening stocks to get a good hold on how the market behaves. Okay. So let's look at MarketSmith. As you can see, this is the homepage of MarketSmith. It says confirmed uptrend. If you click here, sorry, I will go to market conditions. See, from 26th November till current date, it's a rally attempt. So they have not yet updated this page. Maybe it will get updated in 1 or 2 days. I don't know. But as of now, on the home page, you see it says confirmed uptrend. What does this mean? Okay, let's look at that. So if I click here, I will right click here, open it in a new tab. Okay, let me explain what they have written here. A confirmed uptrend market status indicates the Nifty is in an uptrend. Okay, so let's open the chart of Nifty. Now, by no means the Nifty is in an uptrend. If you look at the chart, this doesn't look like an uptrend. Okay, so this is the chart of Nifty. So blue line is the 50-day simple moving average. Green line is the 150-day simple moving average. And a red line is the 200-day simple moving average. And I have drawn this base on the Nifty. I can remove this base if it is confusing for you. So this is how it looks. Now, if you notice, the uptrend begins with a follow through day, or see it's or. Okay, the uptrend begins with a follow through day or when the index reclaims its previous uptrend high. So what is the previous uptrend high? So if you look at this is the uptrend. So the previous uptrend high is this level. Okay. So if Nifty touches that level, okay, then MarketSmith would convert the market status from rally attempt to uptrend. That is one condition. Index reclaims its previous uptrend high or follow through day. So what is a follow through day? So let's right click on that. A follow through day is identified when a major index Nifty 50 closes higher over 1.5% for the day on higher volume than the previous session. So what does this mean? Okay. See, if you see yesterday, if check this number, okay, on this candle, it is 1.88%. So on this day, that is 2nd of January, the Nifty closed 1.88% above the previous day close and on higher volume than the previous day. So previous day was 1st of January. On 1st of January, the volume is 154 million. Okay, actual volume. And on 2nd of January, the volume is 283 million. So almost double volume than the previous session. And the closing is more than 1.5%. So this condition is satisfied. Okay, that is why the 2nd January day is called as a follow through day. It has completed the follow through day. That is the reason why this particular condition has been met. That is the reason why the market status has gone from rally attempt to a confirmed uptrend. At this stage, the index is not showing signs of significant distribution or heavy selling by institutional investors. This is the perfect time to be looking out for fundamentally strong stocks at proper buy points. So, in a confirmed uptrend, what MarketSmith is saying is that you could buy fundamentally strong stocks or you could start looking at fundamentally strong stocks which may or may not be technically strong. So, for example, if the stock has, let's say, 4 points in the base, okay, and point number three, which is our buy point, is in the blue zone inside the base, in that case, it is technically not very strong. The base is not fully mature or the base is not fully complete. But if the stock is fundamentally strong, we could consider taking a trade in such a stock. So if we look at an example, let's look at an example. I don't remember the stock on the top of my head, but let's check HPL Electric. Yeah, have a look at this base. Now, I have not checked the fundamentals of this stock, but I just remember the chart. Okay. So have a look at this base. Started from here, drawn a long base. So if I join the points, point 1, point 2, this is point 3, point 4, and point 5. I'm just joining the extremes. Okay. So if we join these 5 points, you see point number 3 is our buy point, and the buy point comes in the blue zone. So technically, it is not very strong. Ideally, we want the yellow line, which is our buy point, in the green zone. So what Market Smith is saying is that you have to look for stocks that are fundamentally strong. So if this stock, assume it is fundamentally strong, then I could consider buying this stock when the market is in a confirmed uptrend. But if the market is not in a confirmed uptrend, I may not buy the stock, or even if I buy the stock, my position size is going to be small. These are all things we do to control risk, because that's the best we can do. The best we can do is control risk, because we can't control the upside, we can't control the downside. So the moral of the story is, when the market is in a confirmed uptrend, we are allowed to buy fundamentally strong stocks which may or may not be technically strong. And of course, comparative strength has to be there. Okay. That is the point I wanted to convey. So let's look at the follow through day. It happens on the fourth day or later of an attempted rally. What is the meaning of attempted rally? Now, I will not open this page, but I will explain to you. See, this is the low. Okay. The low of this candle is 23263. Okay. After this, you have to wait for 3 consecutive closes above that low. So above this, the low of this candle, 1, 2, 3. There are 3 consecutive up closes. Okay. So on the next day, which is 27th of October, sorry, on 26th of October, when the candle closes, it confirms that there are 3 closes above the latest low. So on 26th November, the rally attempt starts. Okay. That is why you see here on 26th November, they mentioned that from 26th November, the rally attempt has started. So you have to look for 3 closes after this candle 1, 2, 3. 1, 2, 3. This is 26th November. So on this day, Market Smith declared that the market is trying to attempt a rally. But from 26th November till 2nd of January, there is only one candle, which is 1.5% above the previous day close. Okay. And that is this candle. This is a 2nd January candle. Okay. That is the reason why Market Smith has updated the status to confirmed uptrend. Moreover, you see this falling window, that falling window has been broken by this green candle. See, this green candle closing is 24188, and the low of this candle is 24149, 24188. As you can see, this candle breaks that falling window, which is a very, very positive sign. When the falling window breaks, and that too on higher volume than the previous session, that's a positive, encouraging sign, right? Falling window is generally very negative. But now the next question is this rally sustainable? What happens if the market comes down and undercuts this low? If that happens, then the attempted rally has failed, and probably Market Smith will update the status to a confirmed downtrend. Moreover, there is still, I think, one falling window here and one falling window here. So for the rally to really have some power, that falling window has to be taken out. So there is a lot of energy that needs to be utilized for the market to go up significantly. So I personally feel that this rally is not yet sustainable, because I saw that leading stocks of the recent past have not joined this rally. So for example, if you look at Dixon, which has sold recently, there is not much movement in Dixon, even though the market went up 1.88%. Then you look at Keynes, not much movement in Keynes. Then you look at Zomato. These are leading stocks of the recent past. See, not much movement. In fact, it's going down. Then Time Technoplast. These are stocks that I sold recently. So have a look at these stocks. They have not moved. So leading stocks, if they are not moving and suddenly the Nifty goes up like 1.88%, there has to be some reason. So if you read today's Economic Times, the reason is the auto industry, there is a demand revival in the auto industry. Plus, two companies from the Bajaj group suddenly shot up like 6%, 7%, which pushed the index up. The index contains only 50 companies. So I don't think this is a broad based rally in the market. It is just a few companies or one or two sectors here and there which is pushing the index up. What we want is a broad based rally in the stock market. The entire stock market should go up on an aggregate basis. We don't want one or two companies or one or two sectors to go up. Okay. That is why I personally feel that this rally may not be sustainable. Right. And I reserve the right to be wrong. I could be wrong. I don't know what is going to happen in the future. All I am saying is that the reason why Market Smith has updated it into a confirmed uptrend because they see a follow through day as per the rules. And why is follow through day important? Well, follow through day is important because if you look at past 100 years of stock market data in the US, whenever the follow through day has come, a sustained rally has started. So when Market Smith says that the market is in a confirmed uptrend, it is not their opinion. It is based on facts. They have looked at 100 years of stock market data. They have looked at follow through days after every market bottom or every intermediate term market decline, which is like 10 to 15%. And whenever they have found a follow through day, they have seen a sustained rally in the market. So their conclusion is based on data. It is not based on opinion or logic or intelligence. It is purely based on data. Okay, so it's all systematic. Now, follow through day, we checked this at this stage. Index is not showing signs of significant distribution. Okay, but my view is it is showing signs of weakness. Okay, the most powerful follow through days often happen on the fourth through seventh day of an attempted rally. So let's go back to Nifty. You need to understand this. So what Market Smith is saying is that their 100 years of research has proven to them that 1, 2, 3. Okay, after this candle, check 4, 5, 6, 7, 8. So from the fourth till seventh day, let's check again. Fourth through seventh day. So candle number 4, 5, 6, 7. Out of these four candles, if one of the candle is 1.5% above the previous day close on a higher volume than the previous session, then the probability of a confirmed uptrend is very high. But if you see this candle is not in the fourth, fifth, or sixth, or seventh candle, this candle comes much later. Okay, so now the probability that the rally will sustain has gone down. Correct. So it is not just about identifying what is the market condition, it is also about trying to understand what's the probability that the market will go up. Okay. They serve as a confirmation that the market has really changed the direction and is in a new uptrend. So if in the fourth, fifth, sixth, and seventh day that 1.5% candle comes, they have found that looking at 100 years of data, they have found that whenever that candle comes in the fourth, fifth, sixth, or seventh day, the market really changes direction and goes into an uptrend. But that has not happened in the case of Nifty. So this is a warning to you. Okay, this is a rally that might not sustain. Based on what I understand, I'm telling you based on what I've understood. The strength, see, now they talk about strength. The strength in a follow through day can be gauged by action in leading stocks. This is exactly what I discussed with you right now. Okay. You have to gauge the strength of this rally by looking at leading stocks. What were the leading stocks in the recent past? Dixon, Keynes, Time Technoplast, Zomato, Polymedicure. These are the stocks that I bought recently and sold as well. Okay, within 2-3 weeks. These were the leading stocks. When you look at their charts, you don't see strength in those stocks right now because normally a leading stock, when the market goes up like 1%, a leading stock should go up 2.5 times or 1.5 times more than the Nifty's rise. So if the market goes up, let's say 2%, then 2% multiplied by 2.5%, that should be the actual growth in the leading stocks. So 2.5 times of 2%, that much the leading stock should go up. That has not happened. Correct. So which means the The follow through day in the Nifty is not confirmed by strength in leading stocks. What does that mean? It means that the rally might not be sustainable. We have to wait and watch. We have to be careful. Another thing, one of my students messaged me saying that Rohit, I'm not able to find stocks which are completing 10 candles and 4 points in the base as per the rules that you have laid out. Okay, even though the market has come into a confirmed uptrend. So what should I do? Very valid question. Now tell me, if you are not able to find setups, even if the market is in a confirmed uptrend, what does that mean? It means that there is weakness. Overall, there is weakness in the market. We might have to wait for the setups to come to us. Let the stock come to you and then take advantage of the opportunity. You don't chase a stock just because it is the market is in a confirmed uptrend. The uptrend confirmation should come along with proper setups on the stock individual stock charts. The follow through day, coupled with leading stocks breaking out from their base patterns, provides signs of a sustainable rally. So now that the market is in a confirmed uptrend, we have to see for the next 1 or 2 weeks how the market behaves, how leading stocks are setting up. Are they breaking out of the base? Okay. If leading stocks are setting up quite fast, if they are all breaking out from their base, this rally might sustain. If that does not happen, the market will again drop into a confirmed downtrend or a correction. And from that low, when three candles close consecutively above that low, that would be called as a attempted rally. Okay. A follow through day is a key concept in market timing system developed by Market Smith founder William O'Neill. So this system of trying to understand market movement was developed long ago, over 40 years ago by William O'Neill. And this system has been tested over and over again because they have Market Smith, I think, has got 125 years of stock market data. So they have plugged in this information in their system to check whether whatever their hypothesis is, does it really work in the has it really worked in the past? And they have found that most of the times it has worked in the past. So I hope you now understand why Market Smith has changed the market status to a confirmed uptrend, what we need to look for, why should we wait, why the rally might not sustain. I have given you all the reasons. So watch this video maybe twice, thrice to understand what I am saying. Lot of information available here. You can go independently, go and check, read the text, try to understand what they have written because this is coming from 100 years of stock market research. So three things don't work in the market: emotions, logic, and intelligence. Don't use your emotions, don't use your logic, don't use your intelligence. You don't need to do that. Just look at data and follow the data. Okay. So that is what I wanted to talk about in this short Market Smith India tutorial. Thank you so much.